Hi guys, I want to introduce you to an investment option available in the Kenyan market called derivatives. I know most of you guys know how to invest in shares, maybe invest in bonds, but derivatives might be quite a new concept to you. Don't worry, by the end of this video, you guys will have an idea of how to invest in derivatives and why you need to get started. Let's start by defining what a derivative is. A derivative is a financial contract that derives its value from the performance of an underlying asset. Normally, these underlying assets could be either stocks, commodities, or even a market index. We have four major types of derivatives, including options, swaps, forwards, and futures. But for our video, we'll concentrate more on futures contracts which are available in our local markets. The next question will be, why should you consider investing in derivatives? I have a few pointers for you. First of all, derivatives give you more options. What do I mean by more options? See, normally when investing in shares, you're buying shares expecting that the shares will go up and you'll make a profit. So a question would be, is there a way I can make money when the opposite happens, when shares, or rather the share price is going down? And the answer is yes. And that's the first advantage of investing in derivatives. So what do I mean by more options? In the derivatives market, you can either choose to go long or go short. Let me define the two terms. Going long means you believe the share price of a certain stock will go up, hence you choose to buy. On the other hand, going short means that an investor expects the price of the stock to go down, hence they choose to short sell or go short. So basically, when you go long, you make a profit when the price of the asset goes up. On the other hand, when you go short, you'll make a profit when the price of the asset goes down. So in summary, derivatives can allow you to make money when the market is going down or the prices of shares are going down by short selling. That's the first advantage. Another advantage of derivatives is they allow you to hedge your portfolio. So let me define hedging. Hedging is basically a strategy used by investors to try and minimize the losses on their portfolio. So how can you hedge in the derivatives market? What you'll do is, if you have some shares in the spot market which might be losing or the share price is falling, you can decide to short sell in the futures market. Hence, the losses that you're making in the spot market are offset by the gains in the futures market. Another reason to invest in derivatives is the low trading fees. The trading fees for single stock futures are 0.17%, while for index futures are 0.14%. These fees are lower compared to what we have in the spot market, where you pay between 1 to 2% in trading fees when buying shares. Another advantage of investing in derivatives is that you can trade on margin. Let me explain this. On the spot market, for you to buy 1,000 shares of Safaricom, and let's say Safaricom is trading at 16 bob, you need the exact amount, that's 16,000, for you to be able to buy these shares. On the other hand, in the futures market, you don't have to have 16,000 for you to get into the trade. All you have to do is deposit a small amount upfront, known as margin, and then you'll get the exposure. When trading on margin, you're able to have higher purchasing power, or rather leverage, hence magnifying your profits. A final advantage is settlement. Settlement for the derivatives market takes T+1, unlike settlement in the spot market, which takes T+3. T+1 means if a trade happens today, settlement will take place tomorrow. That's a day after today. On the other hand, T+3 means if a trade happens today, settlement will take place 3 days after today. We cannot talk about advantages of derivatives without stating the disadvantages. One of the disadvantages of investing in derivatives is that trading on margin is quite risky compared to other trading strategies. What do I mean by this? Margin is a double-edged sword. In as much as margin can magnify your profits, it can also magnify your losses. So, if the trade goes in the direction you had predicted, you'll stand to gain a huge profit. On the other hand, if the trade goes in the opposite direction, you stand to get a huge loss. Second disadvantage is derivatives are quite complex compared to other asset class. Hence, you need to be really careful when investing in derivatives and make sure that you do your due diligence and learn more about this asset class before investing. The next question is, do we have a derivatives market in Kenya? Yes, we have a derivatives market, and it's called the Nairobi Securities Exchange Derivatives Market, NEXT, N-E-X-T. This market is regulated by the Capital Market Authority of Kenya, CMA. At the moment, we only have futures contracts in our local derivatives market, and these futures contracts are available on 10 key NSE stocks, including Safaricom, Equity, KCB, ABSA, Cooperative, NCBA, EABL, BAT, Stanchart, and I&M. On the other hand, we also have an index future available for the NSE 25, which is a benchmark index for 25 key stocks in the Nairobi Securities Exchange. So how can you get started? To get started, visit the AIB Access Africa website, click on the trading segment, then select derivatives. On this page, you'll find an option to open an account, so make sure you open an account, and then you'll also find info on how to deposit funds. Note that you can use M-Pesa or bank to deposit your funds. And finally, you'll also get more educational resources available on investing in derivatives. How much do I need to get started, and do you guys have any other fees? Please note that we don't have any other fees. The only fees that we have are the trading fees that I had mentioned earlier. And then to get started, you need around, let's say, 10,000 would be enough to take up one contract. A final question is, can I trade derivatives online? Yes, you can. As soon as your account is opened, you'll be able to trade derivatives on an online platform provided by the NSE called Avento. Please note that a link to the Avento platform is available on our website on the same page where you opened your account. Use your email as the username and the system-generated password sent to your email. That's it for today, guys. In the next video, we'll dive deeper into futures contracts, where I'll define what a futures contract is, learn more about the expiry of futures, learn more about margin, and finally have a practical live trading segment. I hope you guys learned a lot. Have an amazing time, and remember to invest in derivatives. For more inquiries, reach out to us via the contacts provided below.